What's going on YouTube? It's T here, back from the EGA channel where we plan to trade and trade the plan. Let's get into the daily brief today. And right before we get started here, make sure you smash the like button and click subscribe if this is your first time coming to our channel. We also love hearing from you, so make sure that you drop a comment if you want me to break down a ticker or something else. Very quickly, just know that these likes that you guys drop us make a ton of a difference in the YouTube algorithm, and I truly appreciate your support and love coming back here every day to watch our videos. Once again, in the stock market today, we have had a pretty volatile week with the FOMC, and today, to top things off, we will have quad witching, which will be 4 types of options expiry contracts that will be all expiring on the same day. So what do we expect from this market, and what are we looking at? I'm going to break down the technicals in just a second. So let's just look at what we have in front of us. Mainly, we're seeing sector rotations across the board. This has been the case since last week. We've been mentioning about sector rotations back into tech, and also money flowing out of the Dow Jones and into technology sectors. We harped about how we were seeing value stocks and large cap as the main focus on what investors were betting on in this round. Money was flowing out of financials and energy, which was rightfully so after a monster rally that we saw and played up to a perfect T, right? So this week we have had a lot of volatility, and I think the volatility will continue into today. But let's have a look at the technicals and break down this market so that you don't have to do it yourself. So let's break it down downtown without a frown and peel this onion. So today on the stock market, remember that we had mainly news from the entire week that has been affecting a lot of price movement. Mainly the things that we needed to focus on that was new was the initial jobless claims that were a little worse than expected. And remember that, as I have mentioned, this will get better in the coming month, as the jobless unemployment claims will now be ending in the month of June. So in July, we should have better job numbers that will possibly allow the stock market and also the job market to recover. Majority of the S&P 500, which has been seeing pretty muted price action while the NASDAQ rallies, is all because of the rotation of money out of the Dow Jones, out of financials and energy, and into technology. So as we mentioned in yesterday's video, we were looking to hold the 420 support, which we have now kind of broken and closed below. We will be looking for a possible down movement into the 416, which is where we will meet this trend line from a bigger time trend here, and that's where I see us going before we find a bounce to the upside. We do think that this market is still in a bullish trend, as I have mentioned yesterday. Nothing has changed. We are still in a bull rally, but with a pullback. This is a nominal pullback, which is required for this next rally to begin. And we can see that the key levels for today to hold will be 416. And if we do break below 416, that opens up a lot of downside. So we need to really stay above 416 and close above 416 to maintain this support level right here to play this to the upside. That's what we'll be watching today. Of course, alternatively, if we hold 420, that would be the ideal situation. And if we do, then we get a nice little extension back up to the 61.8. We got precisely rejected at the 61.8. I can't make this stuff up, guys. This is on the charts. I never move the things around. You watch it every day. You know, there's no way for me to mess around with this, right? And let's have a look at QQQ here. Once again, perfect little execution on QQQ here. We had a perfect rejection on the 61.8. Now, as of yesterday, market closed, I opened up a short hedge just for a very small position, just a short hedge to this downside at 23.6 Fibonacci. I would be expecting a short pullback before we continue to the upside. So therefore, I would like this little pullback to take to the upside in the next round. What levels do we need to hold today for the QQQ? The 38.2 Fibonacci would be a perfect level to hold. If we don't hold that level, we will be looking at the 23.6, which will be about the 342 level. So 343 and 342 will be key levels for the QQQ today to hold in order to hold this bull rally. Of course, we are in a strong bull trend still, right? Strong bull trend. Excellent, excellent. So let's break down some tickers that past comments were requesting. Somebody was asking about Google and asked me to break down Google, so let's do that real quick. Google $2,300 put for July 30th. This was the comment that was on the previous video. A $2,300 put, which is right here. And that seems like the next possible support level, but I think like your strike might be a bit too far away. That's a $100 move if you're looking for a swing trade. Also, your expiry is a bit too short in my opinion. 16th of July, this just gives you 1 month. You need to up that expiry out. Sorry, 30th of July is just a month and a half, and you need to up that expiry a little further, at least for about 50 to 80 days out. So I would recommend to go about 60 to 70 days out and take that contract a bit further so that you have time for this wave to form before taking it to the upside once again. So all in all, not a bad idea. Google is overextended here. It looks like it needs to pull back to continue. But remember that a bull market can get higher and higher and higher. So if you are not long shares, make sure that you keep that in mind. The other one was Square, and somebody was asking if they should sell a Square put at $200 with a 16th July expiry. And my question to you is, it's not a bad idea to sell a cash secure put here if you were planning to buy Square at $200. I'm not sure if that is your intention, but if you were planning to sell a put to just gain premium off the situation, then you should wait for a pullback before selling that put. You typically want to sell puts when the trend is in your favor to the downside, because that will make puts more expensive and give you more premium, causing the IV to spike on those contracts. You don't want to sell puts when the stock is rallying. In fact, this is an ideal situation to sell calls on Square right now since it's rallying so much. You need to see where the probable resistance is, which is around the 245, and then sell a call above that level at 250, so that if Square comes to the downside, you get to keep this premium for free. If you are alternatively already holding 100 shares, then this opens you up to a nice little profit in this region, which is almost like a debit spread. Okay, cool. Just want to break down a couple tickers and give you updates. ARKK, perfectly hitting our 23.6 Fibonacci. As I mentioned yesterday from yesterday's video, there was a very strong bounce. We got an extremely nice run on ARKK yesterday. Beautiful setup, beautiful play. I already have that position, and it is in 30% profits as we took it a pretty long time ago. I expect a little bit of a pullback or maybe a continued rally here. It kind of is depending on the market today. PayPal, hitting our 38.2 second target, now gunning for the 61.8 at 280s. We saw this one a couple weeks ago. I've been pointing it out to you guys. It has been a great paying trade, and yesterday we saw, as I mentioned, still very bullish bounce on that candle. A nice pin bar and a bullish candle is going to send this one up further into the 61.8 extension, and even possibly further up to the $300 levels if tech really rallies deeply. Nike, pointed this one a couple days back, told you guys about it maybe on Monday, and we saw this bearish breakout here. Nike slipped all the way to the 61.8 before bouncing yesterday, and so we're seeing a corrective wave up here before coming back down again. This was a nice little play. I hope that some of you played it. It was a perfect play. If you did take this trade, make sure you drop a comment below and let us know. I alerted our Discord members on our community just maybe a couple days back about this trade, and there were a couple people who took it, so I'm happy that they made profits off it. Apple, next one up. Perfect hit on the 61.8 Fibonacci extension, which is our first target. Our second target is going to be at the 135, 136 levels. So we'll be looking for an extension on Apple up here in the future. However, right now we need a possible pullback here to continue running. I think that a deep extension further and then a pullback would see this one running up to the 137s in the near future. So I like this setup still. It's halfway there, but maybe might need a little bit of a pullback to get all the way there. Looks like a good trade. Congratulations if you played this one. We've been calling this one out for at least 5 or 6 times on this daily brief already, so you should have got a piece of the action if you've been watching this video and following along. It pays to attend these videos, guys, because I make sure that I give you guys a lot of breakdowns and a lot of potential opportunities that I'm seeing. And if you want to be a part of our Discord community where we do this live every single day, you can click the link in the description to check out what we are about. Another one is going to be Tesla, which is now consolidating above this trend line. We've seen really nice movement on Tesla here that's been pretty bullish for the time being. We are looking for this to keep consolidating and move up to the 650s, 660s, and hope that this one moves into the upper channels where our retracements are. And that's all I have for you guys today. So I hope that you guys have a great trading day. Make sure that you don't overextend your trades once again. Let's do the conclusion so that we can break it down. So once again, in this market and this week, we had a lot of data to digest, and we had a lot of information that has come in that is fresh, right? So I will be taking this weekend to do a lot of breakdown and have a look at where the next move is going to be and keep you guys updated. If anything, I will do another video. I am going to be busy with finals for this weekend because I will be taking my final exams for my master's program for my second last quarter in school. I'm so happy, but it's a bittersweet moment because I will be embarking on my last quarter and then graduating with my master's in finance in the next quarter. So really interesting, exciting stuff coming up. I am taking derivatives and fixed income this quarter. So next quarter, I'm going to be doing financial engineering and a bunch of other things. Just like keep you guys updated on what my life's about and how I do things. Lots of things to manage and lots of things to keep track of, but somehow keeping sane here in Singapore. And I hope that you guys do the same out there. So take care, be safe, and I'll catch you guys on the next Daily Brief. Bye-bye.